We've been given a balance sheet with missing numbers, and we have some data, including ratios. So we're going to be building on the information that we have and filling up these question marks. They've given us sales for the year or revenue. They've given us gross profit ratio as 25%. Now, you need to remember that gross profit ratio is equal to gross profit upon sales into 100. And that means, we have gross profit ratio as 25, which is equal to gross profit, which I don't know, upon sales, which I do know, into 100. Now, 48 lakhs over here is division. It goes that side, it becomes multiplication. All in all, our gross profit is going to equal 48 lakhs into 25. And remember, there's also 100. There is also 100 over here, which is multiplication. When it goes on the other side, it will become division. So we have 25 into 48 lakhs divided by 100. Okay, and based on that, I know that the gross profit was 12 lakhs. Now, we need to solve going further. They're saying the net profit after tax is 2 lakhs. And for now, we'll just keep that in mind. Purchases and sales are on credit basis. Okay, that's going to help us when we're dealing with debtors turnover ratio and creditors turnover ratio. Okay, which I think is the next set of low-hanging fruit. Because the debtors turnover ratio is equal to credit sales upon debtors and maybe bills receivable, but we've only been told debtors is there in the question, so it's going to be upon debtors. Because they've said all sales is on credit basis, that means the sales over here is going to be the credit sales here. Okay, so the debtors turnover ratio is 12 times, so 12 is equal to 48 lakhs upon debtors. And now I know that debtors is equal to 48 lakhs upon 12, which is going to give me 4 lakhs. Okay, so therefore debtors is equal to 4 lakhs. And I'm going to be exploiting the software for your benefit, so it doesn't get confusing as we proceed in the sum. Okay, I've got debtors as 4 lakhs. I'm going to scribble that in over here. Okay, maybe I will, let's see. Debtors is 4 lakhs. Okay, now I'm going to take what we have and what we have found and proceed a little lower. Alright, so keep in mind the data that we have from upstairs. Okay, it's important that the gross profit is 12 lakhs. So the data that we've carried forward, apart from the debtors being 4 lakhs, is that the gross profit is equal to 12 lakhs. Now, we've been able to solve for debtors the same way we can solve for creditors. And to solve for creditors, I need to isolate purchases. Till now, I know what the gross profit is. I know what the sales is. I know what the net profit is, but that's not going to help me directly. Right, so let's see what other information can we directly use. They've given us the earnings per share as 20. Okay, and remember your formula for earnings per share. Earnings per share is equal to net profit after tax minus preference dividend, if any, it might even be 0, divided by number of shares. And we know that this number is 20. And now things get interesting because there's no mention of preference dividend anywhere in this question. So we can assume that this is 0. And we have data for net profit. Okay, so your net profit after tax, so 20 is equal to 2 lakhs upon number of shares. Okay, so now I know that number of shares is equal to 2 lakhs upon 20, okay, which is going to give me 10,000 shares. And that 10,000 is what I'm going to multiply into 100 over here to get myself 10 lakhs as the equity share capital. Going forward, we've been told that the stock turnover ratio is 10 times. And remember, stock turnover ratio is equal to cost of goods sold upon closing stock. Alright, this is a solution set for Mumbai University. Other universities, boards may use average stock in the denominator. Anyway, I have closing stock with me. Have we been able to calculate it yet? I don't think so. We have ourselves gross profit. We have ourselves sales. Okay, and now we're just going to use some basic formulae to isolate the cost of goods sold and opening and closing stock. Alright, for now, just remember stock turnover ratio is equal to cost of goods sold upon closing stock, which is equal to 10 times. Debt equity ratio is 0.25. So debt equity ratio is equal to debt, and in our question that debt is going to be debentures. Is going to be debt upon equity. And keep in mind, to simplify this further, okay, we are talking about debentures upon equity share capital plus reserves. Now, going back up, reserves and surplus is still unknown to me. Maybe we should take that as X, but I have the equity share capital and I have the debentures. Okay, so debt equity ratio we've been told is 0.25:1. So I'm just going to write on the left hand side 0.25 is equal to the value of debentures, which is 4 lakhs. 4 lakhs upon the equity share capital, which I know is 10 lakhs, already calculated, plus the reserves, which I'm taking as X. And now we simplify. Okay, so everything in the denominator on this side goes the other side, it becomes multiplication. So 0.25 into 10 lakhs plus X is equal to 4 lakhs. And now we multiply inwards. Okay, so it's going to be 0.25 into 10 lakhs. For those of you good in maths, you can do this directly, or be safe and use the calculator. You're allowed a calculator. So it's going to be 2,50,000 plus 0.25x, which is going to be equal to 4 lakhs. Now 2,50,000 on this side is addition, goes that side becomes subtraction. So we have 0.25x is equal to 4 lakhs minus 2,50,000, and therefore we can say that 0.25x is equal to 1,50,000. And now 0.25 is multiplication on the left hand side, it goes on to the right hand side as division. So we can simply say that x is equal to 1,50,000 divided by 0.25. Okay, and what we have managed to isolate is the reserves in the balance sheet. Okay, so your reserves and surplus is 6 lakhs. Now, I have gone all the way down here, so let's just create a division maybe this way, and I can use the left hand side. Okay, so let's see. I am yet to isolate the cost of goods sold. Okay, and it's a good time for us to think of a formula for cost of goods sold, which is cost of goods sold is equal to opening stock plus purchases minus closing stock. Okay, and then your question is going to be, what is cost of goods sold? We also know that cost of goods sold plus gross profit is equal to sales. And in this question, we know that the gross profit ratio is 25%. 25%. So gross profit is 25, sales is 100. And we can actually go backwards and say that cost of goods sold is 75. Okay, now I have the number for sales, 48 lakhs. So under 100, I'm going to write 48 lakhs. And therefore cost of goods sold is X. And now we can cross multiply. Okay, we can cross multiply and isolate the value of cost of goods sold. So it's going to be 48 lakhs into 75 upon 100. $48 lakhs into 75 upon 100, which gives me 36 lakhs. So we have X is equal to 36 lakhs. Okay, and that X, by the way, is cost of goods sold. So now, am I in a position to use this? Do I have enough of data? We have the stock turnover ratio as cost of goods sold upon closing stock, which is equal to 10. I now have the value for cost of goods sold. So we will be able to isolate the value of closing stock. Okay, so keep in mind the formula that we have for stock turnover ratio. Stock turnover ratio is 10. So 10 is equal to cost of goods sold, which is now 36 lakhs upon closing stock. Okay, and therefore I can say that closing stock CS is equal to 36 lakhs upon 10, which gives me 3,60,000. And that is what I'm going to go immediately and put over here as 3,60,000. Now, as far as this formula is concerned, I have data for closing stock. Normally, when you consider the formula for creditors turnover ratio, it's supposed to be purchases upon creditors. But the question clearly says that the formula is cost of sales, or in other words, cost of goods sold upon creditors. Now life becomes easy. Okay, and let's see. Maybe this warrants another copy. downstairs. So here. Right, and looking at our data, we've been told that the creditors turnover ratio is equal to cost of sales, or COGS, cost of goods sold. Okay, potato upon creditors. Now, do I know what the creditors are? I don't, but I know the creditors turnover ratio is 12. So I can say 12 is equal to the cost of goods sold. Okay, and going upstairs, I have been able to calculate the cost of goods sold as 36 lakhs. So down here, 36 lakhs upon creditors. And now creditors is division, goes that side, it becomes multiplication. 12 is multiplication, goes down, becomes division. Basic mathematics, creditors is equal to 36 lakhs upon 12, which is equal to 3 lakhs. Okay, and I can go back upstairs over here and give 3 lakhs to creditors. And by doing this, I have finished the entire left hand side of the balance sheet. And the balance sheet by definition balances. That means I can now take the total, which is 10 lakhs plus 6 lakhs plus 4 lakhs plus 3 lakhs plus 2 lakhs, which I'm guessing is 25 lakhs. Okay, and that is the total of the liability side. Okay, that is the total of the liability side, which, if I am correct till here, must also be the total of the asset side. Now, we have run through a lot of the formulae already. We have made use of a lot of these numbers. There's something missing which is going to help us calculate other current assets. And we haven't touched the current ratio yet. We know that the current ratio is equal to current assets divided by current liabilities. Okay, so we have 0.25. Oops, that's debt equity ratio. Be careful. We have 1.6. 1.6 is equal to the current assets, and I do not know all of them. I know that it is these three. All right, everything under this heading. They've made it easy for us. So I know it is going to be 3,60,000 plus 4 lakhs plus x, and I know everybody in the denominator. All of these people are current liabilities. Okay, so it's going to be 3 lakhs plus 2 lakhs. Okay, so 1.6 is equal to, add this up, you're going to end up with 7,60,000 plus x upon 5 lakhs. Now 5 lakhs is division, goes that side, it becomes multiplication. So 5 lakhs into 1.6, 5 lakhs into 1.6 should give me 8 lakhs. Please use a calculator. Is equal to 7,60,000 plus x. So x is going to equal to 8 lakhs minus 7,60,000, which is going to give me 40,000, and that is going to be my other current assets. Okay, so 40,000. So I know that my total is 25 lakhs. I have everybody else, and now I can subtract upwards to get myself fixed assets. Alright, so 25 lakhs minus 40,000 minus 4 lakhs minus 3 lakh 60,000 gives me 17 lakhs. So 17 lakhs. And with that, we are done with this question.